Wallets with 10 plus BTC now control 82% of Bitcoin supply. Is scarcity next? Bitcoin market. Bitcoin supply. Bitcoin wallets. Author. Jimmy Aki. Author. Jimmy Aki. About author. Jimmy has nearly 10 years of experience as a journalist and writer in the blockchain industry. He has worked with well-known publications such as Bitcoin Magazine, CCN, and Blockonomi covering news. Author profile. Share. Copied. Last updated. May 14, 2025. Why trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards, focusing on factual accuracy and balanced reporting across all areas, from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. Key takeaways. Wallets with 10 plus BTC control 82.5% of supply, leaving retail investors with just 17.5%. Large buyers like Strategy could absorb 50% of newly mined Bitcoin, accelerating scarcity. Bitcoin's growing centralization strays from Satoshi Nakamoto's vision. New data from Sentiment, shared on May 13, shows that large Bitcoin holders are gaining even more market control. Specifically, Bitcoin wallets holding at least 10 BTC, roughly $1 million, now own over 82% of all the Bitcoin that has ever been mined. How 10 Bitcoin wallets dictate market liquidity. According to the Sentiment report, Bitcoin is increasingly concentrated in the hands of wealthy institutional investors, along with a handful of prominent traders. Bitcoin's total mined supply currently stands at about 19.86 million coins, with the absolute cap set at 21 million. At current prices, wallets holding 100 BTC or more, worth over $10 million each, already hold 60.84% of that supply. Including wallets with at least 10 BTC pushes this concentration to an estimated 82.51%. Less than 18% of Bitcoin remains in wallets containing under $1 million worth of coins. Percentage of Bitcoin supply held by wallets with 10 and 100 BTC source. Sentiment. Bitcoin's absolute cap stands firmly at 21 million coins. Of this finite amount, approximately 94.57% has already been mined. Just 1.14 million BTC await release over the next 115 years. Major holders are increasingly absorbing this limited future supply before it reaches the open market, creating additional scarcity beyond Bitcoin's programmed constraints. No firm exemplifies this aggressive acquisition trend more than Strategy. Last month, the firm purchased 15,355 BTC. Then, on May 1st, the firm announced a capital raise plan of $84 billion to fuel further acquisitions. A few days later, Strategy bought another 13,390 Bitcoin. These aggressive buys have a real effect on Bitcoin supply and market trends. Crypto analyst Adam Livingston calls this phenomenon a synthetic halving effect. Bitcoin's natural halving cycle cuts miner rewards roughly every 4 years. This built-in mechanism steadily throttles new coin creation, enforcing scarcity. But now, major players like Strategy are pushing scarcity further and faster than the protocol intended. They accomplish this by purchasing substantial portions of newly mined Bitcoin when it hits the market. Consider the numbers. Post-2024 halving, miners generate just 450 BTC daily. That's only 13,500 per month. Strategy's recent monthly buys come shockingly close to swallowing the entire supply. The impact is immediate and profound. Demand jumps while fresh coins vanish almost instantly. Retail investors versus the synthetic halving effect. The rising concentration of Bitcoin ownership in a few large wallets has deep implications for the broader Bitcoin market, especially for retail investors. For example, liquidity dries up when too much supply sits locked away. Low liquidity can cause the market to experience sharper price swings. This drives volatility and makes it harder for everyday investors to enter or exit positions at fair prices. The Sentiment report shows that wallets holding fewer than 10 BTC collectively own approximately 3.47 million Bitcoins. At the current price level, this equates to about $358 billion. Bitcoin supply by tier source. sentiment. These wallets belong to retail investors, miners, and modest traders, the lifeblood of Bitcoin's decentralized ethos. Yet the scales keep tipping. Large holders steadily accumulate more coins, squeezing the little guys. When markets tumble or uncertainty looms, retail investors often panic. They sell to secure profits or cut losses, but their exits create opportunities. Deep-pocketed whales and institutions swoop in, snapping up discounted coins. The cycle repeats. Ownership grows more concentrated as the gap widens. Bitcoin centralization paradox. From rebellion to replication. In 2008, Satoshi Nakamoto unveiled Bitcoin, a peer-to-peer electronic cash system with a bold goal of creating a decentralized currency, free from banks and governments. The white paper was a direct rebellion against the financial system's failures, the same system that collapsed that year, exposing the dangers of centralized control. Bitcoin was meant to be different. No single entity would hold power. Instead, a global network of users and miners would keep the system fair, open, and resilient. That was the promise. Yet 17 years later, that promise is fading. The concentration of Bitcoin into fewer hands mirrors the traditional financial hierarchy it was designed to dismantle. Without intervention, whether through mass adoption, redistribution, or new policies, Bitcoin risks becoming just another asset class ruled by a wealthy few. The irony is stark because what began as a tool for financial liberation may end up replicating the very system it sought to destroy. Frequently asked questions, FAQs. How does supply concentration affect Bitcoin's price stability? When a few big players hold too much Bitcoin, they can move markets with a single trade. Buy, prices spike. Sell, they crash. This power makes Bitcoin's price swing wildly and more unpredictably. Could regulation force the redistribution of Bitcoin holdings? Right now, no. Laws focus on stopping fraud and crime, not forcing the rich to share their Bitcoins. Authorities can seize coins from criminals, but forcing redistribution. That could end up messy and legally risky. What strategies can retail investors use to compete? Retail traders can compete by tracking whale activity, using DeFi tools, and sharing insights in trading communities. While whales move markets, informed small investors can spot opportunities early and adapt faster. Knowledge and flexibility outweigh size in crypto's fast-moving markets. Follow us on Google News, Trending News, Recommended Popular Crypto Topics Price Predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. XRP price prediction. Here's when experts say $1,000 could become reality. Ripple behind Trump's XRP post. Could this controversy trigger a rally to $1,000? XRP price prediction. XRP price prediction. South Korean investors bet big on Ripple. Can XRP reach $5 in May? Price analysis. XRP price ready for comeback. Analysts see bull movement and strong potential for upward trend. May 4, 2025. By Arslan Butt. Price analysis. XRP price prediction. While Bitcoin dominates headlines, Ripple surges 8% this week. Can momentum push XRP past $2.50 resistance? 6 days ago. By Arslan Butt. Altcoin news. Ripple whale moves $782 million in XRP. How could XRP price react? 3 days ago. By Amin Ayan. Best crypto to buy now in May 2025. Top crypto to invest in. May 6, 2025. By Alan Draper. New cryptocurrency to invest in May 2025. May 6, 2025. By Inesis Tavares. 12 best crypto presales to invest in 2025. Full presale list. March 3, 2025. By Medb Keely-Cuddy. 10 new and upcoming Coinbase listings in May 2025. April 13, 2025. By Elijah Rankovich. 13 new and upcoming Binance listings in 2025. May 5, 2025. By Inesis Tavares. What is the next big crypto to explode in 2025? September 11, 2024. By Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. October 19, 2024. By Leon Waters. Ripple, XRP, price prediction 2025, 2026 to 2030. August 28, 2024. by Eric Huffman. Ethereum Price Prediction 2025 to 2030. Will ETH bounce back? August 28, 2024, by Ben Beto.